All right, so when a 10-year surged on Friday, remember it surged across that 4.5 threshold, the stock market blinked, right? Finally, the stock market blinked. But like other obstacles that are usually typical obstacles, it seems like the market may be looking through it or going to try to look through these higher buying yields, at least for now. In fact, the market is it's got some company because interesting enough, households, right? The perception of things it's gotten better. Think about this. Probability of missing a minimum debt payment over the next 3 months. This is actually plunged. I mean, this does not match headlines at all. Of course, when it comes to disconnect, my next guest says that we see no disconnect between record U.S. equity prices, elevated oil and commodities, and yields. I'm going to bring it out from BlackRock Investment Institute, their global chief investment strategist, Wiley. So for the average person, it seems counterintuitive. Oil's through the roof, yields are through the roof, and the stock market's through the roof. How can they all coexist?
Charles, I know that they don't seem to add up on the surface, but digging under the hood, there's a huge amount of dispersion underneath equities staying at very elevated levels. So on the one hand, you have regional equities like US equities outperforming European equities that are more affected by the supply disruption in the Middle East, and also slicing and dicing on a sectorial level. You have AI related names doing so much better than sectors that are more energy sensitive, such as airspace, for example. So we do see significant dispersion underneath the surface, but on the surface, it doesn't seem to add up.
No, I mean, and again, it's counterintuitive, but to your point, these earnings, particularly from AI, have been so powerful that they've kind of masked everything. But also, what's interesting is that the sort of shock in general turned everything upside down. We came into the year, emerging markets were outperforming, equal weight was outperforming, value was outperforming growth and technology, and now it's all upside down. Europe is down, India is down, materials, and it's all about IT. Is this how you expect it to go? I mean, many people believe when the conflict is over, we revert back to the script that we started the year with.
If you recall, at the beginning of the year, Charles, there were lots of concern around the significant capex spend in the AI build out. And there was the big question around, are they going to pay off? Is this getting too much? But that concern around capex return is disappearing right now. We see earnings coming through really strongly in listed equities, tech names. For example, they are coming in 3 times stronger compared to expectation at the beginning of the earnings season, but also in the private market model builders. Anthropic, if you look at their annual revenue run rate at the end of last year, it was $9 billion. At the end of March, it was $30 billion. And now it is at $44 billion. This is unprecedented revenue ramp. Yeah. And as a result of that, markets are not so worried about return on investment right now, which is why we see tech surging ahead.
No, to that point, last week, Anthropic raised $30 billion at a valuation of $900 billion. 3 months earlier, they raised $30 billion at a valuation of $350 billion. I mean, this is just, again, we've never lived through any of this before. So let's talk about your tactical positioning here, your big calls. Obviously, favors AI beneficiaries. You think this is a boom that stays in place for some time?
Yes, 100%. And we think that in terms of the different layers of AI play, what is becoming clear is the infrastructure layer and also the model layer. There's huge demand for them and their revenue is going up. But when it comes to the application layer, it is less clear who will win. It is possible that maybe the big spenders won't be the ultimate winners. So that is still too early to say. But the tech ecosystem, the infra layer, and also the model layer are definitely benefiting, and they're driving earnings upgrades in US equities right now. And the last 2 quarters of earnings upgrades in the US equity market are the strongest, among the strongest the last 40 years.
It's been amazing. Also evolving diversifiers. We suggest looking for Plan B, portfolio hedges as thematic opportunities related to AI they build out. Can you narrow that down for us? Like, what is exactly, how does someone go about that?
Well, diversification is really hard to come by in an environment where there is inflationary pressure. We see that from CPI print last week and PPI print as well. And as a result of that, traditional diversifiers are less reliable. We see bond yields, US government bonds, not really working so well this last 2 months because yields have pushed higher, even though markets are concerned about kind of disruption. So as a result of that, in our strategic asset allocation, we roll out multiple scenarios instead of just one base case. We don't think that point forecasting makes sense in this environment, driven by transformations. And we also think that diversification needs to be thought of as a kind of really re-scrutinized from a portfolio construction perspective because we need to diversify our diversifiers. Even gold didn't work so well in this environment because of liquidity dynamics.
I got less than a minute to go with the biggest topic of them all, but I love when you guys do these 5 mega forces: the demographic divergence, the digital disruption, geopolitical fragmentation, and economic competition, transition to a low carbon economy. We had that big meeting last week, President Trump, President Xi, that gets to the geopolitical fragmentation. But I came away from that meeting also thinking that maybe these large economies, including the United States and China, as much as they're becoming more insular, they still want to cooperate and do trade.
That's right. We had warm optics from the meeting, but we also didn't have major breakthrough on sensitive topics like Taiwan or Iran or AI dialogue. So right now, it doesn't change our risk view, but certainly more to come because the two presidents are meeting again later this year. So more to come on that front. But more broadly speaking, Charles, in terms of the mega forces, I think no matter what happens in the Middle East, themes like energy independence, like infrastructure security, like supply chain security will be more important, which is why infrastructure is a big core underpinning all of these mega forces, sitting really at the intersection of them.
I love it. I hope it is. I think it's. I think America lost a step or two, and it's about time we got refocused. Thank you so much, Wei Li. It's always a pleasure having you on. Thank you.
Thanks for having me.
All right, folks.